Welcome to Bears in Exile. Today is August the 21st, Sunday, and it is time for the market overview. We'll be looking at the Dow, SPX, VIX, XOY, TNA, UUP, FXC, GLD, and SLV. Alright, starting off with the Dow, we have another red continuation candle, and it is extremely bearish. I know that some people out there are talking about the floor being down here in this area, which we kissed part of it on Friday. But this is a continuation candle. It has a tail at the top indicating that some buying pressure did come in. It got beat down, and we ended at almost the lows of the day. Very, very bearish. And secondary CCI clicking down, fast stochastic, slow stochastic, 14-day RSI moving average, everything clicking down along with regular RSI, the MACD histogram, and the MACD itself. Where it's going to stop, nobody knows. SPX, more of the same thing. We do have more of a floor, which should be which in theory should be as stronger as it's all uniform. We are very close to it, and if it breaks, certainly that will be a big signal that we're going farther. It should be noted in the short-term moving averages, according to Guppy, the Dow and the SPX. These are pointed down until we have some kind of an uptick. This is a very strong signal that we are headed down. And looking at the VIX, we do have a hammer. It is rather high in taking in context of how high the VIX normally goes before it craps out. Of course, the Bollinger Band is still pointing up along with the short-term moving averages, and all of our secondaries clicking up. So it's going to be very interesting. If the market does continue to go lower, I'm very curious to see where the ceiling is for the VIX. And certainly it's in the danger zone now, but the market itself is in a danger zone now. So very, very interesting. XOY, oil, mirrors S&P and Dow perfectly. Short-term moving averages pointing down in a rather uniform fashion. Every secondary indicator clicking down. So certainly this is not a counter trend buying time. Ugly for the bulls. For the bears, this is fantastic. TNA. Now, we did almost exceed the lower shadow from the current bottom here. Short-term moving averages, of course, sloping down, uniform. Everything else clicking down. This is very bearish. There's nothing really to say except, if it can be saved at the bottom of this recent bottom on all of the major indexes, then perhaps there's something. But if it breaks it, certainly, who's going to be holding that bag? Well, I should say, who's going to be holding it besides the people who are already holding it? And anyways, it's too bad we didn't get that bubble corrective move up here. It's very very disappointing, but it is what it is. UUP, we have a hammer. You'll notice the short-term moving averages now are sloping down. Middle Bollinger Band above the short-term moving averages. This one is very mixed. I mean, if the dollar is going down, it should be good for the markets. We do have a possible reversal candle, but everything else, for the most part, is saying this is bad news. Short-term short stochastic and fast stochastic are clicking up. So we do have a little bit of a mixed bag. 14-day RSI moving average going sideways. Very, very interesting. Beyond that, we have FXE, its sister, the Euro, inverse hammer. We did get a breakthrough and bounce off of the long-term bar, which is a flat line. Secondaries are all mixed. We have half of them are ticking up, and the two stochastics are clicking down. So we need more data. It's as simple as that. And GLD, our second VIX, we do not have a hammer. The body is too large, the tail is too small. It did touch the upper Bollinger Band and backed off. But short-term moving averages, very bullish. Long-term moving averages, very bullish. Middle Bollinger Band line it entered the short-term moving averages a little bit, but it does need to get to at least the halfway point before it is a real warning sign. Every secondary clicking up. SLV actually did better than gold. It is a hammer. It is sitting right at the upper Bollinger Band. We do have a bullish bar forming, and it did bounce off of it and is continuing on its way. It does look bullish. All of our secondaries clicking up, with the exception of the RSI moving average, which is clicking sideways. So a mixed bag after another down week. Beyond that, looking at our potentials, we had talked about the 10-600 in the past few videos when we looked at the black box, and certainly that looks right about right at the moment, which coincidentally lines up with the lower shadow of this candle just over a week ago. So I will be watching to see what happens when it gets to that point. It would be a likely area to stop should it decide to stop, and if it breaks through it, certainly it's really bad. SPX on the black box. We have convergence here at 1100. However, we do have the minor trend sloping all the way down to 1070 roundabout. So once again, something to be aware of, and there you have it. We need more data. We always need more data, and we'll see where this one goes. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.